One of the downsides of real estate, particularly if you want to make passive income, is that usually you first have to go to the effort of buying something and then selling it or renting it in order to make passive income. Well, here's a few strategies that show you how as a small investor, even if you have no intentions of getting into real estate, you can still make passive income from real estate. So you want to make passive income, but you don't have the time, you don't have the money, you don't have the interest perhaps to learn a strategy to do this all yourself. You just basically want to use the money that you have, and even if that's potentially not a whole lot, and invest in something. Well, I got the answer for you. In this video right now, I'm going to share with you 3 different ways that you can invest passively without ever having to deal with any kind of real estate and still be in the real estate game. Let's jump right into it. The first way to invest in real estate without really dealing with real estate is to invest passively in what's called REITs. REITs are basically R-E-I-T-S, are real estate investment trusts. Real estate investment trusts are basically big companies that own a lot of real estate. Usually they own multifamily, they own self-storage, they own commercial, they own office, and those kind of things. And REITs by law have to actually distribute 90% of their profits to their investors. And they're doing that in the form of dividends. So in other words, if you just simply buy a share of a REIT, what comes with it is a quarterly distribution from the REIT, in essence, passive income without having to manage properties yourself. The bad news about REITs is that they have fees. Also, if a REIT is mismanaged or something like that, then you might not actually get much cash flow. And the last risk factor of REITs is, of course, you have no control. If you just buy a few shares of a REIT, then guess what? It's no different than buying a few stocks of Coca-Cola. They go up and down in value, but at least the very good benefit of a REIT is that you are invested in real estate and you are getting a share of the 90% profits that they have to distribute. The second way is, in a way, a very similar way, just that it's off stock market. Very simply, you can invest in a real estate fund or also in what's called a syndication. So for example, my wife and I, we not just only flip land, we also syndicate multifamily investments. So we have a dedicated team that focuses on multifamily investments, meaning apartment complexes. So we have acquisition managers that do nothing but search through all the potential listings and have broker relationships and get deal flow. Basically, they look at multiple deals every single day and spend all their days looking at deals, underwriting deals, looking at numbers, and evaluating performances of potential deals. In the quest of finding the gold nugget, that's that perfect undervalued property with upside that we can get at a good price in a good market with good trajectory, and then we can buy and make into that and continue to develop and make it into that golden goose that spits out golden eggs and provides a great return for our investors. So then we have an asset manager that manages these assets. And then we also work with brokers on the selling side of these properties. And we work with property managers to manage these properties. Well, this entire team is paid by me and Michelle, of course. It's paid by us. It operates under our control. We are involved in the day-to-day, so you don't have to be. So you can very simply come into those deals and invest money. Now, there's typically 3 different ways that this can be done. One of them is called a 506B syndication. The second one is 506C syndication. And the third one is actually done to crowdfunding. 506C, so the second one that I mentioned, is the most restrictive one. 506C is a syndication that only allows what's called accredited investors to invest. As an accredited investor, you have to have a net worth of $1 million outside of your primary resident, or you have to make an income of $200,000 for the last 2 of the last 3 years with a reasonable expectation of also making that income this year. Or if you're married, that goes to $300,000. If you qualify for that, then you can invest in pretty much anything in the world, anything in the United States. There's no restrictions. If you do not qualify for that and you want to invest in a syndication, that's a 506C, you're out of luck. You cannot invest in it. However, there's also the 506B. The 506B is a similar syndication, but it allows up to 35 investors that are called so-called sophisticated investors. Sophisticated investors are investors that make good money. There's no clear guideline of how much money they need to make. They can invest even if they're not accredited. Now, we do often 506b investments. So it means that you make 100 grand in somewhere, you have $100,000 in investments off to the side, you want to invest $50,000 with us, absolutely no problem. We cannot take all your money. We do not want to take all your money, and the law does not allow us to take all your money as an investment because you want to spread your risk anyway. But if you have a few $100,000 invested in the stock market and you want to take $50,000 or $100,000 and invest it in a syndication like a 506b, you can absolutely do that. And depending on which syndicator it is, some syndicators allow for as little as $5,000 investments. Some allow for $25,000. So make sure you check those kind of things. But right there is a way to invest passively. Because in this case, you are an actual partner in a specific deal. You get what typically called a preferred return paid out quarterly. So you get cash flow. And at the end, when the property is being sold, you get a good portion of the profits. So you win multiple times. And on top of it, while you own the property is being depreciated and you get tax benefits from that too. All of that together is really a killer way to invest as if you were a big guy, just with the big guys, without having to have the ability to invest millions of dollars yourself. The third kind of strategy is crowdfunding. Crowdfunding is perfect for the smaller investor. There's crowdfunding platforms where you can invest as little as $500 into specific syndications or into certain funds. Again, all of these things exist. Make sure you educate yourself about it, or hey, make sure you subscribe right here because there's going to be many more videos where I explain concepts exactly like that. Lastly, going back to the market, you can actually also invest in real estate EFTs. EFT stands for Exchange Traded Funds. Again, they're a little bit more complex kind of constructs. We're not going to go into much detail here right now, but check out the market, check out EFTs, check out EFTs. They're focusing on real estate, and you will find some opportunities right there too. Lastly, and again as a bonus, I can't resist it. I gotta tell you that you can actually create your own cash flow, particularly when you follow the land profit method. Because when you follow our strategy, you can pick up properties, particularly land and lots, in some cases for less than $1,000. And you can turn around and in some cases sell them for $10,000 and sell them with seller financing, meaning that you sell it for $10,000, you get $1,000 as a down payment, meaning you do this without any money in the deal and you start generating $100, $200, $300 in monthly cash flow. Or take a $50,000 property, put it on a contract for $10,000, get a $10,000 down payment. Again, you have no money in the deal and you receive $500 a month in cash flow. The message here is that you don't need a lot of money to get the game of passive cash flow going. What you need to have is education and knowledge, and then a little bit of a willingness to do what other people are not willing to do. If you do that, your path to cash flow is bright and clear, and you're on your way to success. Well, if you enjoyed this video, then make sure you subscribe, because in future videos, I'll cover all these strategies in much more depth. All right, see you in the next video.